What's going on, family? Get started here in just a moment. Give another 3-minute buffer, folks, to get up in here. And what a historical day that is happening right now in the markets. For some, they're just not they're not happy. We've got some levels we need to really talk about. We got some game plans to go over. So I want to make sure that everyone is abreast of what's going on. While the weather's nice, it's springtime, summer's approaching wherever you are in the world. And here in Las Vegas, it is a beautiful sunny day. People sitting out by the pool, you know, doing their runs for the weekend, getting ready for the week. And we've got history among us. So I just want to make sure that everyone is informed. Informed. Oh, man. Let me know where you're tuning in from down below. Let me know where you're tuned in from down below. If you are rewatching and this is an intro for you, you're more than welcome to skip ahead to where I start sharing my screen and going over. But hey, this is a live. We like to interact. I am treating it as if folks are right in front of me. So I appreciate you for being here, and we'll get to it in just a moment. Beautiful, beautiful. Crazy. Tuning in from ATL. What's going on, Shlita? What's going on? Some of y'all, it's the first time man, I don't think I've done a YouTube video without a hat. That's how long I hadn't had a cut. That's a shame. But yeah, probably should keep this tamed. So there is a person underneath these hats, folks. There is a person underneath these hats. All right. It's become a brand. It's become a brand. All right, so I got my IG up here as well. We are live on YouTube, so y'all make sure y'all tune in on YouTube. I just want to tap in on IG really quick and let y'all know that there's some historical things that are coming, that are happening right now. And as you see my calmness, these are things that were predicted. We already called. We've got lower to go. And I want to show the proof as to how we called these things happening. We've got a lot lower levels as well. So if you're here, I'm on live YouTube. I've been doing these Sunday stock sermon Sundays for the last, I don't know how many weeks, folks, a minute. So we've been on an absolute train. All right. So make sure you tune in live here on YouTube. There's my YouTube family. I'll see y'all in a second. I'm going to tune off of here. Links in the bio, or go on my story and click on there. All right. Because I'll be sharing my screen, giving all the levels, everything that's going to be happening this week. So talk to y'all later. Peace. All right, YouTube family. Let's go. We got Brooklyn in the building. Oh, man. Y'all hear that music in the background, don't you? All right, so let's turn this up. Let's get excited, man. Golly. Those panic and stuff around here. Let's get excited. All right, we're going to play little tunes real quick. And we're going to get excited for a second. Turn this up for a second. 45 seconds. 45 seconds. We're going to share the value here. 45 seconds. I love it. Yep. Picks out some puts for the weekend. All right. In 5, 4, and 1. All right, let's go, family. Let's go. Let's get to it. And this week, we got a heavy week on the docket. Okay. What I'm going to do is, if you want to take some notes, if you want to have your charts up, go ahead and get those up ready to go. We have some comparisons to go back and forth today. I don't want to keep it too long, right? We want to get in here about an hour and a half max. Okay. I'll try to keep it to about an hour, 15, hour and 20, leave some room for some Q&A. If you want to ask for specific stocks that you're looking at, go ahead and put them down in the chat. I'll be checking the chat periodically throughout this live. Thank y'all so much for the support over the past, I guess, 4 or 5, 6 months. I don't know how long I've been doing these stock summer and Sundays as of now, probably over a year at this point, but we've been running strong as of late. And whether you're down in your portfolio long-term, little bit red, hopefully this information has brought you a little bit of peace. Okay. I know it's not, maybe you're listening in the future or re-listening to this and you're like, Brian, this was a historical day, but I'm still not excited. Like I'm kind of a little bit nervous. Can you ease my angst with some information of what we should do or consider, I should say. Okay, on these public platforms, I always say that this is not financial advice. I'm giving comparisons, ideas, perspectives based on history and our analysis. And then from those two things, we can make decisions based on what you want to do with your long-term portfolio. If you want to sit on the sidelines, if you're buying this dip, if you're kind of holding just a little bit, because as I've been saying, we have not confirmed a bottom. Okay, so you have to be mindful of where you're buying these dips and if it keeps on dipping. Okay, so if you got a little amount of money, right? Maybe whatever little is to you, and you can add 2, 3, 4 times, great. It's a great time to buy up some dips, great time to add into some long-term positions, great time to pick up some partial shares if you're a beginner, right? Trading wise, I still am kind of holding strong right now as far as where we're going. Last couple of days, I really haven't been trading heavy Friday, even Thursday and Wednesday because of the way I like to personally trade is risk to reward. And every day is just very wide ranges, very wide stops, moving 10, 20, 30 points on our ETFs, our SPY, QQQ. So, hey, there's money to be made, but there's also risk management that we need to pay very, very close attention to, because what does Warren Buffett say? Hey, the best investors do not lose money. Okay. But yeah, we have that risk that we have maybe lost some money and sold some things. But if you've not sold, you haven't lost nothing. You're just down. All right. So let's get to it. I'm going to share my screen here and I'm going to give some comparisons between 1987, which is going to be our comparison of Black Monday there. And then we're going to look at 2008, 2007, that perspective, and then the game plan for the week. All right. Let's go. All right. So I'm going to pull up some charts here just to kind of give an overview for folks that need this. Maybe you're a visual person. Okay. It's a little bit blurry here, so I'll kind of explain it if it's a little bit blurry on your screen. Okay. This is the Dow Jones in 2008 versus 2005. Okay. On the right-hand side, I've got 2008. Okay. Leading up to that time, we got 2007, which is at the peak here. If you've seen the movie, put it down below. If you've seen the movie already, I can't even think of it right now. So put it down below for those people who are like, what movie he's talking about? We've got a double top. Okay. See right there in 2008, we began to form lower highs here. Okay. And then we had as we call it, a capitulation or a correction, right? Do you see that first move down is a correction move? Okay. That first move down is a correction move. Then we pop and then we continue down. Okay. Now, am I saying, for disclaimer, that I know that this is exactly going to happen? That, man, Brian, that looks very eerily similar. What's going to happen now? No one knows. but there is history that tells us a story of potentially what could happen. So if it's happened before, it can happen again, and the cycles repeat themselves periodically over the years. Okay. If I look to my left here, here is 2025. So now we've entered into the March double top of 2025, and we're down here in this valley dip. Okay. So we're down here now, and I'll show you on my charts the S&P futures. If you haven't already seen the NQ futures, the RTY futures, Bitcoin is coming back closer to that lower $75,000 range. We've got Ethereum coming back to 1,500, things of that nature. So we're at some key support levels. Okay. So we want to see where we're going to bounce. So if this is where we are potentially now, that Black Monday type of situation, and if we move it over to here, okay, which are the 2020, that's 2024 right here, this consolidation, okay, back in March of last year. So if we're all the way down here already, then are we due for a small rebound, right, back up? Yeah, I would say so. Okay, so is this the week that the Fed kind of has some type of good news? Is this the week that CPI has some type of good news? If I were to say that this was all the way down, I would say yes, because CPI and PPI have been halfway of a decent response, but it's more of a drastic kind of sell response, meaning I'll just jump straight to the charts and show you here that we are all the way down on the S&P futures. We're pretty much down into this 480, 490 levels. Let me check on my after hours here and just show us, because we got to get straight to it. There's really got to get straight to it. So in the morning, right, it's not showing on your Robinhood or here on on my Webull, but this, based on the S&P futures and based on where NQ are, they're down 3-4% after hours. So that puts us roughly on SPY down to about 483. So it's sitting at 505, and we could be down at the 480 level in the morning. Okay. Now, 480 is getting very, very close to our 2022 highs. Okay. Our 2022 highs are right here around 460. And then I have been seeing that some charts, depending on the platform that the person is using, has been roughly around that 480 mark. Okay. And you can see that those gaps, if y'all remember some of my Stock Summer Sundays, I talked about this move happening to retest the high. Okay. Let me know with the one down below if you remember me talking about that this is a natural structure from 2020 to a 30% pullback to a measured move. Okay. And typically that move get measured back to retest that previous high so we can go back higher. Okay. So that is the structure that we're looking at now, is that we are starting to approach that real big kind of capitulation bottom that we've seen before. So let me pull that up here. Maybe you've seen it on socials before. It looks something like this. Okay. Let me pull this up and open it into a different tab. And you've seen something very similar to this graph here. All right, capitulation, graph with fear, image. Okay, something like this. Okay, so straight up move into a lower high double top. Okay, fear starts to happen. It's a bull trap, and we're roughly in this capitulation area here. Now, in capitulation, we've already talked about what that definition means. It's a panic sell when you have retail investors typically, or big hedge funds, or uneducated, uninformed individuals in the stock market begin to call their brokers or their brokers get hit with stop losses. They get hit with margin calls. They have to sell out of their positions, things of that nature, because they were in too heavy, believing that the market was just going to keep running and running and running and running. So when you're in fear and capitulation, that is a falling knife free fall. So what I've been essentially, all this combined together, what I've been in summary warning people of, or just being mindful of, is that just because we're in fear or extreme fear with the fear and greed index does not mean that we can't go lower. Okay. Just because we're in 4 and this thing's about to run off the daggone charts. Okay. Just because you're in extreme fear does not mean that it's just going to bounce and just come out of nowhere. We have gapped down 1 time, 2 times, 3 times, and I believe this is the 4th time that we wake up in the morning 4 days in a row and the market is down again. Okay. So for those of you that are like, oh my gosh, like panicking, like I'm 20 minutes into this live video and my heart rate's going up, Brian. Okay. I'm going to get to the good stuff. Right. This is all intentional about giving people the information and presenting it in a way that they can be mindful and aware. Because I really don't think people understand, and maybe you do, the level of drasticness this is, because the history may have not been in your history books. So if you weren't part of the 2007, 2008, if you don't remember 1987, which I don't personally, right? If you don't remember these times actively, if you weren't on the charts in 2022, okay, then you're just going to say buy the dip every time, buy the dip every time, buy the dip every time. Buy the dip, in my opinion, in this type of market, it has to be very strategic. Okay. So I'll speak to my beginners and then I'll move on. I'm using the example, how do you dollar cost average, Brian? The question on this live video is, what do I do during this time? You've got 3 decisions. Okay. The first decision is to sit it out for a little bit until you feel like you are comfortable going back into the market. Now, my savvy investors are like, Brian, I don't know about that advice. Like, I believe people should be buying up assets, buying up assets, buying up assets. But if a person doesn't know what they're doing, that's their prerogative. So wouldn't it be better for that person to put it into a high yield savings account, put it somewhere where they know what they're doing until they get informed? Okay. So I would never tell someone just go in and buy something that they don't know about. I think that's misinforming people. Right? Because the person will go buy something and go do something, but don't know what to do with it. Right? And that's why you're here. So if you're here, number 1 probably should be ruled out. But I'm just saying, stay out of the kitchen. If it's too hot for you, just stay out. Number 2 is that you can begin dollar cost averaging when you have these correction, crash, and then quote unquote recessionary pullbacks. How would you do that? Well, I'm going to give you the $5,000 example. I've got $5,000 that I do not have to touch. And if this is a different number for you, 10,000, 15, 20, 100, whatever it is, $5,000 that you can put into the markets that you don't need for bills, things of that nature or whatever, and you don't have to touch it. It's sitting maybe even in a savings account where you don't need it for emergencies, and it's just sitting there and you can pull 5 out or whatever that number is. That's your investment money. I've got $5,000. I don't need to see, Brian. Can it double in the next 2, 3, 4, 5 years? Easily, in my opinion. So that $5,000 can be distributed over 3 different installments. So the first installment maybe was last week. Someone installs, just keep it simple. Just say it's SPY or QQQ, right? They install their first $1,000, right? First installment, $1,000. That means you buy up the S&P 500. You can buy VTI, VOO, SPY, okay? QQQ. You can buy up these indexes that include the overall market. $1,000. Okay, if it drops another 5% to 10% of the market, I'll deploy 15. So now you got 2,500 in. Okay. So you're still left with another 2,500 just in case there's one more other drastic fall, right? Lower than what it is. And that is where you begin to add a little bit heavier. Maybe you add 17, 18, 2 grand, something like that, or the rest of the 2,500. Now you've got 3 proper installments versus loading the boat 2 weeks ago. And disclaimer, in the next 5 years, even if you load the boat up at the top, you'll most likely still be fine. It's just for newer investors long term, they're looking at that first $5,000 installment. You know how I know? Because people message me and say, Brian, I added Tesla at 350. I don't know, I'm down. It's that it's that worry during the immediate moment because the person doesn't have patience for the next 5 years, or they put too heavy of an amount in and they just don't know what they're doing and they actually needed that amount. Get my drift? So the reason why as a thought leader in the space, or as a person, a random person on a public platform like YouTube presenting this information, I get for my savvy investors that it may be easy for you, but you have to think about the person that doesn't want to be in the stock market, that doesn't agree with it, that thinks it's a gamble, that doesn't know what all this stuff means, that they don't see, oh, I heard someone buy assets in 2022, forget it, whatever, I don't really care. You have to think about that person. How do you gravitate that person to see what you see? You have to ease them in on the training wheels so they can build their confidence in what they're doing. And that's my role here, is try to build people's confidence to see that this is a true skill set, and it also is a wealth generation type of move. Okay. You asked for another 2022. You asked for another potentially 2008 as far as the market and assets go. Okay. I'm not talking about groceries and consumer goods and insurance and all that stuff, but you asked for assets to come at a cheaper price. Here we go. Okay. So it doesn't matter what amount it is, if it's $5, $10, and maybe if it's not for you, it could be for your children. It could be, man, I can get Nike at $50 for my kid. Right, man, like I can get NVIDIA at $60, $70 for my kids. All right, so start having that type of mindset right now. Okay. I'm getting no end in sight. Analysts say stocks have ample space to keep selling off as Trump and top advisors dig in on tariffs. Yes, there is ample more room to go. All right. Let me check the chat. What we got, folks? What's going on? What's going on, Trent? How's everybody doing? How's everybody doing? Am I checking in with everybody? Can everybody give me a 5 in the chat if we're still on pace? Any questions, thoughts? 5 in the chat. We're still on pace. We're still good. All right. Cool. All right, let's roll. All right, here's another graphic here. Okay, Fed pivots. So Fed pivots are typically when the Fed is going to be cutting rates, okay? Cutting rates, and they're pivoting based off of what they believe that we need to, essentially is going to save the market in some type of way, okay? So we got a couple Fed pivots here, 1969, okay? Look where the pivot happens, the market pulls back. 1973, pulls back. 1981, we had that drastic pullback that I talked about in the mid-80s into 1987, which was that Black Monday. We got 2000 dot-com bubble, and then there's the Fed pivot, and then we got 2007 Fed pivot lower, 2019 into 2020 when the tariffs, Fed pivot, and then there came COVID. And look what happens here in 2024. We got another Fed pivot that we got those rate cuts that everyone was excited about. All my, no offense, all my uninformed real estate realtors, I should say, telling their clients that, hey, the Fed just cut rates. We should get mortgage rates lower. Yeah, if you are a real estate investor that has multiple properties that can pull equity and you've got a heavy amount of cash on hand, but a first-time buyer, yeah, buy up the asset. But are you putting them in a hole where it's not really, Nothing's changed, right? It was almost like a fluke to announce that we had a rate cut. And in my opinion, I told everyone, put a 6 in the chat if you remember in Leverage University, when I mentioned to folks last year, I think this rate cut is a fluke, and I think he got too aggressive too quickly. He cut by 25 basis points, then 50, then another 50, right? And then we boomed into the election. Everyone thought we were back. And I was still sticking to my, okay, cool, that's fine. I'm not buying. Well, Brian, not everyone knows what you're knowing, and not everyone is keeping up to date with this. It's not a prove me right type of situation. It's looking at history and not getting into the rut of what emotional based investors are looking at. Because typically the bias is towards what is happening well in your life. So if I'm a Tesla bull and I see Tesla at 400, but if you were real with yourself, there's no reason Tesla should have been at 488. There's no reason. But the Tesla bulls were excited because they were up on their position. That's all I'm talking about. So let's, as a community here, at least on my channel here, okay, just be real with yourself, even if it's against what is good for you, so you can plan and prepare for situations like this, and you can be an opportunist when these assets are dropping. We good? All right, let's get off my soapbox here. There's put everybody into an emotional state. Okay, let's look at the economic calendar for this week, as we always do. We've got on the docket, we got consumer credit coming in at 10:30 a.m. on Monday. Okay, excuse me, 3 p.m. After hours. That's about an hour into power hour. So 3 o'clock Eastern Standard Time. The market closes at 4 o'clock p.m. Eastern Standard Time. We got Tuesday, nothing really big there. We got Wednesday, wholesale inventories, any type of 10 a.m. data, mark that. And then we got the FOMC meeting. So if you want to highlight big days, big events that you may want to watch or just see the reaction, you don't have to trade, you don't have to invest, you don't have to buy anything. If this is your first time ever seeing this, just watch on Wednesday in the afternoon at 2 p.m. Eastern. Just watch what happens to the market, the volatility. Do we shoot down? Do we pop up? Do we get a rebound? All those types of things. Okay. So this is a massive day here on Wednesday afternoon. Then we also have Thursday, which we have a massive day, CPI and PPI, our consumer price index, meaning the cost of consumer goods, right? The inflationary report that tells the Fed how prices of consumer goods are doing. We know they're already elevated, but the data might be skewed and say, hey, they're doing better when we know they're not. PPI is our producer price index, which is essentially the cost of manufacturing goods. So our companies, our big companies, how much is it costing that company to run their business, essentially, from the goods that they are having to buy to run their operation. All right. So it goes us, then businesses. Okay. Or just say consumers, then producers or commercial. All right. We got consumer sentiment at 10 a.m. as well. That consumer sentiment is going to be very, very important because the consumer sentiment has been absolutely horrendous the past couple of consumer sentiment reports. If you don't know what consumer sentiment is, think of you. You watching this. You are the consumer. How do you feel about your prices that you're paying out in the world right now? So it's a survey. It's a preliminary survey. They're talking about how the consumer sentiment is of the overall economy, of their goods and services that they're having to pay for, their insurances, their groceries, their mortgage rates, their car loans. How is the consumer feeling? You can probably answer that question for yourself. All right. So if I look at this docket, as I call it, or calendar, right? Do you see the correlation of if we're falling right now, something has to save it, right? So it either has to be the FOMC and Powell yapping his gums on Wednesday and saying, hey, something's happening. We may cut rates. Something may be coming this summer. I see things improving, even though last week he just said nothing's improving, that these tariffs are awful, which sent the market lower last week. Or it has to be CPI and PPI that just shocks everybody. Okay. Can I get a 10 in the chat? Can y'all type 10? Y'all type two numbers for me to let me know that you're alive and listening. Are you seeing why this week is very pivotal if we're already dropping on Sunday? Brian, this can't go any lower. It can. Okay. So take in this case, take the technicals, take the RSI off of the chart just for a second. We're going to take the fear and greed index, just kind of put it to the side just for a second. I still know in the back of my mind. That's why I've been waiting, because I'm like, okay, we've got to find a bottom pretty soon. But no one knows where the bottom is. So this is one of those situations where I'm just going to step out the way. Okay. I'm just going to step out the way. Maybe you'll catch some puts on the way down if you'd like. Okay. Be very careful that it can rip right back up. We'll talk about that on the charts. Okay. I just want everyone to make money, but I also, in my opinion, the best rule in the stock market is risk management. How are you managing your risk? You can make a lot of money, but as you know, it can rip in the opposite direction. Okay. So maybe now's the time to just buy up long-term assets. I know a lot of you are doing that, thinking 6 months ahead, a year ahead, 2 years ahead, 3 years ahead, 5 years ahead. It's like trading right now might be good, but it might be better to think, let me pick up some dips. Just dollar cost average, turn on recurring buy. All right. Let me take a pause really quick. Questions, thoughts. What are y'all thinking? Questions, thoughts. On pace. Beautiful, beautiful. Now is the time to pick up dividend stocks. Yep, we'll talk about that. I got a whole watch list for those. Yep, evening fan, let's stay strong. Yep. Beautiful, beautiful, beautiful. All right. Cool. All right, we got some earnings. We got earnings season coming up. Let's take a look at the earnings docket here, which could bring us back to life if tech earnings or some of these earnings kind of come back to life here. So this week, nothing heavy other than Friday. We got the financial sector that will be stepping up. So we got airlines, finance, and then typically healthcare kind of comes first. And then tech will be at the end of April. Okay. I'm going to copy this image, put it in our Discord, and then bring it up there. Okay. If you're still not in Leverage University, or you're still not having signed up for our boot camp this Tuesday through Thursday, I'd highly recommend it. So look forward to seeing some of y'all in there. Trading floor, earnings. All right, so let's bring this up. Some earnings this week. Delta, we got Chase on Friday. We got BlackRock on Friday. We got Wells Fargo on Friday, and we got Morgan Stanley on Friday. Heavy Friday week. Delta should be pretty nice trading after on Thursday morning, or potentially Wednesday before Powell speaks. So I'll maybe take a look at Delta, see what they do. If I don't see anything there, might just wait all Wednesday until after Powell speaks. Just do not want to mess anything up on this week. It's too much volatility. Do not want to mess anything up. I'd rather let things settle first. We got Walgreens, Tilray in the CBD sector. Not the CBD, but the cannabis sector. Let's see. CarMax should be interesting. But Friday, main things right there. And I like some of their charts, actually. They're approaching some really, really solid support levels. So, and also the financial sector has been fairly good on their earnings the past couple of times. If we take a look at it, JP Morgan earnings, okay? Look at their last earnings beats. Beat, 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 beat. Double beat across the board, okay? So if I see JP Morgan having really good earnings moving into this next earnings season, which is on April 11th, this Friday, I can maybe expect that JP Morgan could have a nice little recovery And when the financial sector recovers, that begins to recover SPY as well. All right. So keep that in mind. If we got financial sector potentially on the horizon for having decent earnings coming in, then we should have SPY recovering off of these lows. All right. Cool. This chart right here. I don't see one bottom wick on this weekly chart. All right. That is a deadly, deadly, deadly chart. All right. 480. 490, 480. Okay. All right. Any more fundamental news that we got? So we got our economic calendar. We got our earnings that are coming on. And then now it's time to go into the charts. All right. Please throw anything out. If you have any questions, Brian, what do you think about this? Hey, Brian, I don't agree with you. Like, give me your perspectives in the chat. If you're able to type it in, I'd really appreciate it to create some engagement so I can clarify my intention for today. My intention is for everyone to just be informed, first of all. Second of all is to obviously make some money. But third, and most important, is to manage risk. All right. Because emotions start getting involved when you see this stuff. All right. Keep that chart in the back of your mind that I put up a minute ago. So keep this chart in the back of your mind. Also, keep this in the back of your mind as well. All right. SPY. I'm going to be looking at 490. Okay. And we may be underneath that when we wake up in the morning. So let's look at the ES futures, first of all, and see where we are here on the futures market. Okay. So do you see the futures market is right at those 2022 highs? We need to hold 4,800. Okay. We could tick underneath 4,800, but I want us to hold up 4,800 on the ES futures. Very, very pivotal there. If you don't know what the ES futures are or futures in general, you do not have to trade them to pay attention to them. This is the S&P 500. This is the same chart as SPY. Okay. So if the S&P futures are already touching 2022 highs right here at 4,800, if you're learning from me, the psychological level, 4,800, then we need to hold that level up. Okay. Remember, break, retest. Okay. Can everyone see that? Break, retest, break, a big resistance level that we couldn't get above in 2022. We finally broke above it at the beginning of 2024, and we got above it. Now we've got to come back and retest that 4,800. Okay, remember that parabolic move at the end of 2023 and all 2024 when most individuals were struggling. Like most businesses and most individuals were not liking 2024 if you ask most people. But the market was straight up. So was this an anticipation, and were these real buyers? That's the question now, because excuse my French, we're damn near giving up the whole 2024. You get my drift? So in that case, this is very important to hold up because we need to bounce from this level. And that's my sentiment. So I've got my risk hat on. Like, okay, we're approaching this level pretty aggressively. This is a lot of selling pressure here. Okay. Do not want to necessarily jump into a falling knife here and think that we can go lower. I want to change my sentiment into some sort of buying, but I have to be mindful where I buy. So my mindset is as a buyer all the way down here. If y'all want to know, it's like, Brian, is he still bearish? I love to short. Don't get it twisted. I love to short the market. I love puts. I love the downside. But as far as we go down here, my mindset is shifting into a buyer. So all on Thursday, if you saw me, all on Friday, if you saw me, I was thinking, like, where's the bottom? Where's the bottom? Where's the bottom? Give me a sign. Give me a sign. Give me a sign. Okay. So that's where my mind is. So 4,800. If we hold 4,800, that can be a sign of some sort of bottom. On SPY, they'll be roughly around, you see, it's not all the way at the 2020 highs, 2022 highs on SPY. Okay. So as the ES futures are approaching 2022 highs, I'm going to be mindful of where SPY is in correlation, which should be roughly around this 480 to 475 level. And that would fill all of those gaps that we're gapping up all 2024. Okay. So 480 to 485. Now I've got very wide ranges, as you can see, because the SPY is moving, or the market is moving in very wide ranges. On the day alone, 524 to 505, $20 move. Right here, 548 to 535. So I've got about a $10 to $15 window of where the market's moving. Okay. So I'm giving you some levels of where the bottom is, and then we'll talk about trading wise. I know some of y'all are like, can we make money this week with trading? Yeah. It's all about entries. You can make money on the downside, but where are you going to enter? That's my question. That's what I typically try to teach one-on-ones, or any of y'all that are in live trading, is where are you going to enter? Yes, it's going to go to that level. Where are you entering? What's your contract? All right. So 480 to 485. That's where I would want that next psych level to kind of come in. I'll pay attention to 490, that psych level. So I'm just watching psych levels. If I got any newbies on here, psych levels are just simply round, even numbers that typically are at whole numbers, or they're in fives. So go fives and tens. So 495, 490, 485, 480. Okay. And then obviously I'll be paying attention to this 500, but I think we might be significantly through that in the morning. So I'll be watching 500 if we reclaim it. All right. So as I'm analyzing this chart here on SPY, one thing I want to consider is this going to be our capitulation like drop that we got last time in August, like this? So if you notice this August move, we came straight down and we dropped here roughly 10%. Okay. We are significantly below that now. We are in bear market territory. We are officially in a bear market right now because we are over that 10%. We are now at roughly about 15, approaching 20% from the all-time highs. Okay. So if I go back in 2022, okay, if this is your first time on my live, I like to educate. So I'm giving you the why of all this stuff is happening. And then so you understand the why. And then we get down to the lower time frames to say what's going to happen on Monday, Tuesday, Wednesday, Thursday, Brian. What do I do those days? What do we do tomorrow? All right. So 2022, we were here and we were down on that first move roughly when we enter that bear market territory. That was the correction. And now we're here roughly 20%. Okay. So you see how we rebounded here at that roughly correction territory. We begin to rebound, bounced, and then continued lower. And then we reached that kind of bear market 20% territory, bounced. So can this potentially be a small little exit of all the shorts and we rebound back up into this 520, 525 level? If you look to your left, it will tell you a story. Look what it did when it got below that 518, 520 level. Okay. So you already know what I'm going to say. Typically, you want to retest the most recent level that you broke. So if we do bounce, it will be a drastic bounce, most likely trying to target that 520, 518. And it will look something like that. Okay. We need some exits of all the short positions. That means everyone gets out of all their puts at once. Everyone exit all their short positions. What will initiate a squeeze right back up. Okay. So we need that to happen. And you can see how that could be the possibility. If I zoom into a 1 hour time frame, there's the 500 level. If we get just underneath 500 and we reclaim 500, that's when that squeeze can start happening back to 518. And you see what we did on Friday when we gap down, we turn that 518, 520 into a rejection to stay lower. I got that level. Well, why did it just kept going there? I got that level all the way back here. We got to zoom out a long way to get back all the way over here. Right there, right there, right there. And then it comes down to that 487 level. So that's a marker there for us that would be that 487, 485, 490. And it would look something like this in the morning. Another gap down into that level. Okay. Now, if we measure that move, that's exactly 20%. You see how it's lined up now to that 2022. So if this ends up being somewhat of our bottom and we reclaim, then we can start squeezing to fill some of these gaps. All right. So the first thing on SPY that I would like to see for us to have a bottom is I want to look as we call reclaims. You hear me say that word? Reclaim would be back above a key level. So you don't always have to time the exact bottom. You can buy the dip if you like, but if you're trading, you'd want to see a reclaim, a first squeeze back up. Right? Then wait for the first pullback. And then you can take it up like that. That's typically what we call a reclaim. Okay. If you're in my live trading group, if you're in Leverage University, right, you don't have to worry too much because I'll typically be talking everyone through this during live trading. Okay. And you'll see the candles moving in real time. If you're on your own, okay, please research, do your due diligence, understand what I'm talking about. If you're not understanding the lingo, do your research or get involved. Right. Here's what a reclaim looks like. Capitulation down, big move down, reclaim, lower high, higher low, and then we go. Okay. So I want to see a big move up off of that level, reclaim it, and then hold above the previous support, and then we can take it up confirming. Because if you don't do that and you're trying to time the bottom where the calls are, you're going to get into some type of bull trap. Right? Oh man, we're in extreme fear. We're in extreme fear. I'm trying to trade it, and you try to trade calls. The RSI is super overextended. You get into calls down here, and you're trying to fill this whole gap, and it stops you out right here. You just keep going lower. Okay. But if you know what you're doing and you're scalping, that right there move from 510 to 522, great scalp. That's 100%, 200%, 300% on your money from there to there. So we're in a scalpers / day traders market, at least for right now. That means quick moves, in and out, take your profits, get out, and we're good. Let me check the chat and make sure everyone's good. Thoughts, let me make money regardless. Trent, you mean like let me you mean like let me just make some money regardless? Or is that a question? I'm gonna give some plays for sure. I'm gonna give some plays. It's just about entry and contract selection. It's really what it's about. All right. So this week, my levels on SPY for at least right now. Okay, let me turn on after hours and see if it's showing us something here a little bit on these lower time frames. Okay. So at least for right now, after hours, we're somewhat sitting right at 500. Okay. At least on Weeble. We could be in the morning a little bit lower underneath 500 potentially, but this is an extreme low in my opinion. I'm expecting potentially on Monday with what we have on the docket that we could gap down a little bit in the morning, okay, which will present an opportunity for us to squeeze and recover just a little bit. Now, how much, we're not sure just yet. So that's my expectation. The dark black area is when the market's open on my charts. The light gray area, if you're not familiar and haven't heard me before, is when the market is closed for New York hours. So this is when the market was open on Friday, what happened. And then that's why I'm drawing this green on Monday. Okay. So if we push down into this level, I'll be looking at potentially calls or an upside on SPY. Okay. And it'll be targeting that 518, 520 retest level if we can get back up there. So 510 will be a level just because it's a nice, easy psychological level for me. So 510. Okay. Get back above that yellow line and then squeeze back up in that 518, 520. Okay. Then I'd want to look at where we got rejected on Friday, which would be 526. So we could squeeze potentially another $20 if the market does decide to, everyone exits all their short positions and we squeeze back up for a nice little recovery. Does that mean we're out of the weeds yet? No, not necessarily, because we've seen before that whole move being taken back before. And that's what I'm talking about. Waiting for the retest to see if that is a true hold and we're going higher. Remember, my mindset is as a buyer right now, but I'm not really trying to, time the bottom or where the bottom is. So I'm like, where is my buy signal? For trading, at least. Shares, you can be digging dollar cost averaging all in this stuff. All in this dip, DCA. So remember, I speak to traders and I'm also speaking to long-term investors. All right. All right. So there's SPY. Any questions on SPY or any confusion that I may have for anybody thus far? Can I get a 1 in the chat if everyone's following me? Like, this is all a sentiment game. That's how I build my thesis. That's how I'm like getting how did you know it was going to fall all last week? Because I'm getting myself a sentiment and I'm just watching levels. Can I get a 1 if everyone's following me? Maybe a 2 if you're still a little bit confused. That's perfectly fine. I just want to am I going in the right direction? I always get a feeling, a sentiment before I begin to get, levels and where we're going. All right, let me do a little fib retracement here. Fibonacci retracement is a tool I can use and pull it down to that 500 level. Okay. So you can see here, if I move my lines, if I pull that fib all the way down to that 490 level, where I already charted that it has the possibility to go, look at exactly where the retracement would be to get back up to the 23.6%, 518, 519. Right there. Then if we squeeze, the next level is into that 535, 536, where we gap down. Okay. So if you want to take a screenshot or look at that, those are the potential levels that we could retrace back up to if we do find some sort of bottom this week, roughly around 490, 495, and into that if we reclaim 500. Okay, back to 520, back to 536, and ultimately back to that 560 level was our big kind of make or break level, was that 560, 550. So that's a big move. That's a 60-point move that we could retrace all the way back up into. Now you're like, Brian, are you still not a bull if we do that? No, I'm not. Why? Because I still trust the charts and that is still a lower high. It's like, dang, still? No, not yet. So you can buy this dip and there is still a possibility for lower. Remember, we have just entered bear market territory. So if we even squeeze back up into there, I need to see it clear back above 560 to go back up to all-time highs. Otherwise, right back down. You see it now. Haven't been wrong yet on a Stock Sermon Sundays about these pops getting faded, no matter how big the pop. Okay. it is still not confirmed that we have changed the direction from here. That's all I'm saying. I'm not saying don't not buy the dip, just keep preparing for lower. Everybody see it. You see how a chart just tells you so much of a story. Lower high, lower high. Even if we pop back up into 550, another lower high on a daily time frame. Now that's a lot of bullish momentum, right? You're like, dang, that's a 60-point move, and we're still not back in a bull market? Not necessarily. So you still have to keep your head on a swivel. Be glad you bought that dip, but also understand that, are we headed all the way back to all-time highs in this type of economy? Have your rates gone down yet? Have your grocery bill gone down yet? Or is this just the start? All right. So you heard it here. Maybe you heard it other places, but that's all we're talking about. That's what a hedge fund manager is looking at. That's what a long-term investor is looking at. Is, I don't care if I buy this dip. We can go all the way down here. And then in 3 years, Brian, it doesn't matter. I'll be up here. Yeah, that's true. But in the short term, you got to be mindful of where you're adding, because you might be sitting in some red for an entire year, having to keep adding lower. That's just a possibility. All right. I'm like, dang, I'm like catching myself. All right. Everybody's good. All right. I appreciate I have people that are realist. All right. We can be optimists, but let's also be realistic. Like, okay, that's how you remain calm. Every day I expect lower until it tells me otherwise. Every day I expect lower until I tell otherwise. At least for right now. All right. And we will recover in the next year, 2 years, and be right back all the way to highs. All right. Cool. All righty. Let's go into QQQ. I know a lot of folks buy QQQ, or they're always looking at the tech indexes. Okay, if you look at the leverage versions of them, I know, Ben, you do, so correlate that with QQQ. I'm not going to go over the leverage with people on this platform here. I'll do it inside of the university, but QQQ 400. It looks clear as day, right? Previous 2022 highs. You can see that QQQ is a little bit ahead of SPY, right? So the tech index, or the NASDAQ, right, is getting hit obviously a little bit more by the tariffs. Makes sense. Apple does business in China. Almost every company does business in China and other countries. So yeah, they're going to get hit harder with the tech. And this is what people were talking about with the AI bubble and tech being over and running the whole market. It was a risk. But long term, we know that tech and AI is not going anywhere. Y'all probably use ChatGPT today. Right? We got NVIDIA chips in our computers. Okay? So we know it's not going anywhere. Now it's just time to buy it again at proper levels and just wait. All right. So QQQ 400 is my level that I'm looking at. 400 to 405, maybe even 410. Remember, give it those $10 increments on your indices right now. So 400 to 410 is a range that we need to hold on QQQ. And if I look at the NQ futures, have we broken? That's a little bit concerning. Okay. So we got to reclaim back over NQ 16,800. 16,800. You see buyers start to step in a little bit here. People started to exit their short position. Okay. But right now the NQ futures are down, I believe. Where are they? Let's look on here. NQ futures, they're at 16,677. 16,677. So they are down 677. So they're still in range. Still in range. All right. So this is going to be very key this week of what do the NQ futures do right here. So if you click off of my YouTube video and you go click on other YouTube videos and you try to just get a bunch of information from different people and whatnot, hopefully you're watching the right folks. They're going to probably say the same thing is, hey, buy the dip, but be careful. Buy the dip, be careful. Buy the dip, be careful. This is our retest level. Need to get up off of here. Need to get up off of here. Because if we get under here this week, down into 1600, we can have a little exit of a short position. I think we'll recover. All right. But if we get under here, look what happened in 2022. It's no different than any other chart. That's a little drastic, but if we get underneath there, that is a possibility. Get into 2022 levels. Okay, so I'm just letting everyone know we need to hold this level. I'm still thinking as a buyer. I'm thinking optimistic, like, hey, we're a little bit overdone. We're a little bit overcooked. Let me not fearmonger anymore. Let me just present the information to let people know. But like, come on now. Come on. Need to have a little bit of recovery off of here so we can see what's going on. But it doesn't have to. All right. So QQQ, that'll be down into 410, 412. And I'm looking at that as a buy zone. Push down into there. Everyone exits their short position potentially. Because if you think about it, if I'm in a short or a put position, or whatever side I'm on for my folks in leverage, or if you're familiar with this, typically whatever side that we're on, most individuals, most investors or traders are going to start exiting their positions leading up into major data. So if I'm in puts, do you think I want to risk all the profits that I've made going down into CPI and PPI? Probably not. So that will initiate most likely some type of short squeeze right back up if everyone exits their position before Wednesday and Thursday. So that's how that could happen. So we could go from 412, 410 up back to 430, 440 and reclaim this whole Friday move back up into 440. That is a possibility. We could move 20, 30 points in the next couple of days. So yeah, do you think I'm going to be thinking calls? Most likely. We got to find our entry. So for those of you in live trading this week, okay, I will be thinking calls, but where the entry is. I'll be thinking calls if I enter something, because that is the best risk to reward trade. If we're not comfortable with it, I'm staying away, and I'll just wait for a bottom to come in and where we go from there. All right. Where's the bottom that we would ultimately want to retrace back to, that we need to retest back on QQQ? We'll be back up into this 450 level roughly. So that would be an ultimate target. Would be back up into that 445, 450. So yeah, we could move 50 points back up to the upside with these wide ranges. Very similar to what happened here. See a straight fall in this level. Everyone exit their short position. Roughly around the same time, to be honest with you. What was that? April of last year? Exits their short position. People get their refund checks, whatever. Maybe they've already gotten some refund checks. They buy up some stocks at a discount, and we squeeze back up. Back up into 450, then back up into 460 on QQQ. All right. Let me check chat really quick. No questions thus far? Nobody? Nobody got any opposing statements? I guess everybody's following. Maybe you got some opinions. Like, I'm buying. Whatever it is. Just what's folks' opinions? I know some people have been telling me, like, I just don't know yet. So I just been just kind of sitting and waiting. That's okay too. It's okay too. All right. If we look at the retest level in IWM, I'll just cover this very quickly. It looks pretty simple there. Back into 160 would be the ideal level. But we do have some buyers that are sitting roughly in this 180 level as well. But if you can see, IWM kind of broke trend and it is back underneath the 2021 highs. And last time we were back underneath these highs, it pushed down into that 160. So I believe they're trying to push it down into that 160 level roughly and see what it does around that 160, 165. So IWM may have a little bit lower. If you're trying to take it lower, I know I have some people in here that like to trade IWM. I do as well. Then we need to just find entry. Okay. So IWM, I think, is a perfect example of, Brian, well, what if I do want to trade puts? What if I'm just not convinced on calls yet? What would be the best put trade that you would look at? Okay. And there's some more gaps down here. So let me show you IWM, for example. If I were to trade puts and put together, all puns intended, to put together a game plan, okay, on puts on just say IWM, I want to go back to my left-hand side and look at where the big resistance levels are. Okay. That is the best way to trade puts in this type of market when you have very wide ranges, in my opinion, to protect yourself. So that means you might have to be a little bit more patient. You remember when we were patient on this SPY? Do y'all remember this? I said, hey, this went from 450 back up to almost 480. Excuse me, 550 to 580. That's a 30-point move to short it. So you had to be patient all through this move back up, miss all the calls, and there is the rejection level right there. So sometimes it's not going to present itself every single day. Man, I really want to trade puts. I really want to trade puts. You might have to wait for the retest level to come in and everyone's yelling and screaming, yelling and screaming. You didn't pick up the dip. You didn't pick up the dip. And you're like, okay, cool. I'm going to short it when you're about to exit. Right? That's how that looks right there. So I'm not going to do a wide range on SPY. Let me do it on IWM. If I want to short IWM, I'd probably want to wait for a retest at some of these top end levels closer to 200. You're like, dang, it's at 180. So I got to wait 20 points back up. You might have to if you want to have the best risk to reward. Okay. If you just don't trust the calls yet, if you're like, I'm just staying away from calls right now because I don't know where a bottom is, you've got to wait for the pops and fades. Got to wait for everyone to be yelling green, and then you jump in the downside like that. Okay. So take a couple of days off. If you see green and you're like, I don't like the calls, wait. Do not trade that day. Okay. Because there's a couple levels on IWM that you could look at because IWM has broken a big trend here. You could look at this level, which would be right around 189. So the best would be roughly into that 196, 197 level up here. Okay, you can see it from over here. What happened last time went down to 160, 160, 160. So it's trying to get to this 160 level, but it might not go straight down. So it might pop into here and down, or it might pop into here and go down. You see that? So hopefully that helps for my folks that really are itching for more puts, because you're seeing how much money is being made on the put side. You're like, yeah, I just want some piece of it. You can get it. Look at your bottom end of the range, wait for the pops, the green days, and then we can wait and just chill, go run your errands, go do your business, go do your job, distract yourself, wait for everything to push back up, and then we'll find an entry on puts if we see it resisting again to come lower. Okay? Do not get caught up in a bear trap as it's pushing down here and you're trying to chase puts lower and lower and lower and you don't know where the bottom end is, it squeezes back up. Okay. Does that help, folks, for my itching put people? Put a 2 in the chat if you can. Does that help for my itching put people? It's like, man, I want more puts. Everyone keeps saying puts. I just keep hearing puts on Twitter, Instagram, YouTube. Everyone's in puts. Where do I enter my puts? The best way is to wait for those green days to pop back up. Does that help for some people? I'm buying, but also learning how this market works. I'm glad I joined leverage. Now I know how and why things happen in the market. It allows you to be better prepared and in position. I appreciate that, Dreama. Thank you so much. I did not tell her to say anything, so I appreciate it. If y'all ever want to reach out to some of the folks that are in here that, are active and, you want to ask them questions, you're more than welcome. Okay. But we'd love to have you inside of Leverage University. Links down below. There should be a slight little discount code, or if you want to reach out to someone, help them out, you're more than welcome to. But appreciate you, Dreama. We're teaching people how to fish. So when you wake up today and I'm enjoying my Sunday, I'm watching a movie, I'm getting prepared for the week, and I look at the markets, I'm like, oh, it's red. Cool. I expected that. That's how you want to start reacting. Not, man, did you see this thing down? I need to check the portfolio tomorrow. I don't know where it's going. You start calling up friends and family. You start calling folks like, yo, you see this? Man, I'm selling my Tesla tomorrow. That thing just tanking. I already got my bottom level in on Tesla. I see a clean bear flag here, right? If it takes out 217, I got 210, 200. I'll see y'all below 200 on Tesla. It already got a downgrade. It's got earnings coming up, which I think are absolutely going to shit the bed. No puns intended. All right. So I've got some levels down here on Tesla at 200, and then I've got this gap fill down here to 140, 150. Now, is it going to go in a straight line? No, in my opinion. If I'm wrong, I'm cool with that. But that's my bottom end level. So if I expect that to happen, based on my technical analysis and what the previous history has told me, then I'm not even worried about it dropping. And man, oh man, you see that Tesla news? I'm not worried about the news. I already have my levels on the charts. I expected a downgrade. Cool. They're just dropping it down. Cool. That's the charts are trying to take it down. All right. All right. Hopefully it's helping everybody out. Let's make sure you put your perspective. I'm going to get into some things that are buys right now. All right, Brian, I'm done with all the negative stuff and trading. What can I buy if I have a little bit of extra? What if this is the bottom? What are some ideas of buying? Okay. I'll give you some that we're looking at inside of leverage as far as the levels. Just give you some free game here. The semiconductor sector. Okay. Chips, NVIDIA. A lot of y'all are like, man, I want to buy some NVIDIA. I want to get NVIDIA. I'll go over NVIDIA. Okay. SOXL. Okay. Now what this is an ETF, an exchange traded fund. All that means is it's a cheaper version. It's a conglomerate of a bunch of different stocks in that same sector. As you can see here, the semiconductor sector. It is a bullish 2X. So all that means is that when the semiconductor sector moves, meaning NVIDIA, Qualcomm, AMD, all these semiconductors, all the chips move in a certain direction. This particular, I'm just trying to keep it third grade level here, okay? This will move in a dramatic way, typically 2 times that amount. Okay, I'll just keep it at that, okay? So I don't want you to worry about how much is moving and all that kind of stuff. I just want you to focus on the chart to keep it simple. And I want you to look at this level and look at the patterns. So if you're a believer in NVIDIA, in chips and AI, and it's not going anywhere, okay, then this will recover, right? Because we need those things to perform for our technology for the future. So if I believe that and I don't want to maybe spend, or maybe I do, but I want something that, man, what can I get 100 shares of? What can I actually put some money into and get a decent amount of shares? Because that's where frustration comes in the markets. It's like, man, I can't get 100, or I don't want to put $10,000 into NVIDIA right now. Well, I can potentially get 100 shares or 1,000 shares of SOXL. And last time XOXL was at $3, $4, $5, It went to 70. It went to 70, and it will probably recover, just say at least half the move in the next year and a half. So you're going from $6 to $7 to $8. And even if you just double that and go back to 16, you've doubled your money. So just say you had $800 in there. You just made 800. Well, Brian, what if it goes to 24? You do the math. I'm not going to sit here with grown adults, right? You start doing numbers with shares. So this is a main watch for us personally that I'm just going to give some game on, that you still have to be mindful of dollar cost averaging, but you can look at this clean chart and say semiconductors, chips, they need to run our phones. It needs to run. Yes, they're going to get beat down just a little bit based off the tariffs and whatnot. But as NVIDIA and all these companies have so much cash on hands, they'll recover. Right? So that's a main one that I believe anyone and everyone could buy something of and say, man, I just don't know, but you want to buy something. But every stock you look at, you're like, man, I don't want to, I have it, but I don't know. That's the sentiment right now. People ask for discounts, but when it's free falling, no one wants to buy. So $300-$400 would get you roughly around 30, 40, 50 shares of SOXL at the price it is now. Everyone see that? We good? So that is one that I would keep on high alert, high watch. Okay. Still dollar cost average. Right. Put something in there, not financial advice, that you be comfortable with. You can look at my chart here as a reference that, okay, Brian, well, 5, 5, 5. It could tick down into the 5s or 4s. Okay, cool. I've got maybe 3 ads. Maybe I want to put $500 in. I'm a new investor, right? And maybe that's not a lot to someone. It's like, man, you need to put more in there. Run your own race. Okay. Got $500. I want to put something into something. You believe in the chip sector. What if you got 500, it runs back to 50 and your average cost is at underneath $10? Is it going to matter? Get my drift? Okay. So SOXL, if you wanted a little free play game there, I'd be happy to give to anyone, just to give back to y'all for showing up of your time. Again, there's more where that came from inside of our community, right? With all the things that we give here in our long-term sector. Okay. Shares, leaps. Okay. So that is one that can cover a whole sector instead of trying to pick and choose. Okay. Let's look here. Nike's another one that I'm interested in. Okay. I'm interested in. And the only reason, some of you may have different opinions, but I go against the grain of when everyone is sleeping, everyone's silent, everyone's thinking that it's away. Consumer spending will never go away. When folks get a little bit of money back in their pockets, they'll be right back at the mall. They'll be right back at ordering for the kids and the summer camps and, you know, their football Nike cleats and all. And especially if you think about it, we've got a different generation. I serve typically millennials, Gen X, and I know I have maybe some boomers listening. Okay. If you're younger than that, if I got some Gen Zs on here, awesome. Congrats to you. But we've got a wealth transfer from Gen Z that's coming in like no other. And I'm saying that to say that Gen Z has found a way to monetize and make money faster online and entrepreneurial or whatever they do. Because if you, am I the only one that's seeing this? You go to the mall, you go out, and you see these young kids running around. I'm like, yo, your whole fit. Like when I was your age, your whole fit is in the 4 figures. Where are y'all getting this money from? Right? So I've got to keep that in mind, is that we've got a different generation that may be burned a little bit on the assets of being able to buy a home at 600, 700,000 and things of that nature. But income accumulation of being able to make money from anywhere, any place, and they're just renting and they're fine with that. They can make money elsewhere. We got a different generation coming up behind us. So for us millennials, Gen X, even some boomers that are on here, maybe we got to think a little bit differently about, man, ain't nobody buying no Nikes. Then you do something different. Okay. So my psychology is going all the way there. And then I come back on the charts and I look at, say, $50. It looks like a buy zone here. It's getting into that zone. Full retracement from 170 back to 50. Well, Brian, how do you know that this company is not going out of business? Like when a company gives up the whole move from its 20 from 2016 and it's back at 2016 levels, how do you know that that company, all right? I'm not even going to give that game. Y'all, I'm giving too much. If you know, you know. I look at the financials. I'll keep it at that. I gotta keep something. I gotta keep something. Okay. Some of y'all just stay in the one place and stay on here. It's like, man, Brian just keeps talking, man. He's just gonna give it all on here. I can't do that anymore. I look at the financials. Okay. I look at the company's health based on their financials and see if they're growing, if they're still profitable, if they're still generating revenue. If the numbers still look good, then they're just taking a hit based off of consumer confidence, consumer spending, and this is not in their control right now. All right. Another one that I'm looking at, Target. I'm going to speak to my melanated folks right now. Don't get it twisted. I personally, respectfully, based off of this chart right here, I really don't care about DEI. Based off of the charts and the stock market. Now, if you want to boycott, if you have your opinions, I'm just going to say, that's cool. But based off of money making and the chart and the company, Target is not caring personally. You might be taking a hit on them right now, and they may even go sub 80. But Target is one of those that I'm paying very close attention to, right? As a chart that has a potential discount in the consumer spending sector that could recover at least back half the move and retrace right back up to all-time highs. Okay? Because in general, this could be just a big bull flag. Okay. So I'm keeping high alert on Target. Okay. Another one, DG never left. Y'all seen me and heard me talk about that a lot lately. Look at Dollar General here, already making a move off this level. So if you want to know what a move looks like when you're like, man, I just don't know about that Nike or that Target, it looks like it's dead. This is how the move starts to look, right? It starts to get to that low, trust the chart, at $70 when we signal in the community to start buying some shares. If you got some, let me know. Okay. If you got partials, I don't care if it was like, hey, I got $100 worth, right? Or $50 worth or something, right? This is the first move off of that level. So while the market's tanking, Dollar General is going up. Okay. And Dollar General just had their earnings, which was halfway decent. Okay. So it's already moved from 66 back to 100. And it's now broken out of its short-term downtrend, at least for now. Okay. If I draw a line here, from here to here, do you see that downtrend volume candle out of there and then breaks back above 86? Like we said last week, back up to 100, and it beginning to enter back into this golden pocket where the buyers will truly start picking this up, and it will start picking up some serious steam back up. So Dollar General, pay very close attention to underneath the $100. I like it. Okay. Now, if you can't buy shares, okay, and you want to consider some leaps, you can look at leaps on these as well. All right. So if you don't want to buy shares, you don't want to own Target, and you're like, I ain't owning no Target. Okay. Well, look at a leap on Target out until 2027, something like that, or potentially out until December 2026, January 2026, kind of soon there, in my opinion. But you can look a year out and trade calls back up. All right. Another one, HIMS, got it on heavy watch in the healthcare sector. Okay, they're doing some awesome things. It's just getting rolling. Volume candle back up to 72. It's retraced back to 25. It'll probably retest back at least half the move. So it'll be back up to at least 50, in my opinion. And then ultimately, I think 100 plus at some point if they keep doing the right things. But keep hymns on watch at this 25 level. If it drops lower into 20, I think that's even a better pickup. And it's right on this trend line. Bounced, 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 and right there at that 25, which was pretty much right at, kind of that IPO pop in 2020. Well, the IPO's been here, so that 2020 pop, 25. So hymns, another good one, is consolidating right here. That could be a nice day trade back up to 30 at least. So 25 back to 30 on hymns, and then ultimately back to 40 and 50. I'll go over crypto as well. Please I'm not going to go over my whole watch list. I mean, I can cover everything on here, but I'm not going to do all that. Ionic, keep that one on watch. That one's pulled back pretty heavily. Back to $20 on Ionic. Okay, so we'll watch that as well. In the quantum computing space, we called it at $6 and $7, went up to 50, and it's pulled back about half the move. Check the chat, see if anyone's put anything. No? We got some more viewers and watchers. Appreciate y'all for tuning in. Nothing. I've been told folks just like, Brian, I don't know what that. Just keep going, man. I'm just taking notes. Like, I'm a more interactive person. I'm like, dang, are they even hearing me? Like, Palantir. My final level on Palantir after this kind of bear flag that I'm seeing. I know, Trent, you asked, can Palantir have lower? I've got Palantir potentially back into 45 and 50. Okay, 45 and 50. You see that retest level right there and that measured move, depending on what it does right here. So if I measure that move, that takes it back down into like $60 for Palantir, $60. Okay. But there's a lot of buyers down here at 65 or so, but it is on a downtrend. So 65 and 60 on Palantir in the short term. NVIDIA, everybody's favorite. Where's NVIDIA going? It's going to be very interesting on NVIDIA. It's I'm going to have a better analysis over it after what happens this week, because it's either back to 100 and we're back. I still, for those that want to know, I still have not gotten my swing position yet. It's still an idea. I'm not personally in any swing call positions just yet, if you wanted to know. But I need to see what it does at this 90 and 85 level. Because if it gets below this moving average on a weekly this week, if it gets below 88, I mean, I see nothing to 60 like that. So it's all depending on what happens this week with NVIDIA, what it does. So just need to be a little bit more cautious about what it's doing right now. And there's a gap. Oh my goodness, that gap we've been talking about for like almost a year. That gap down to 60, 65 right there. It looks like nothing but room. So I'll be looking for a pop back into like we talked about for the calls. If we do get some type of pop and we reclaim 100, CPI takes us back up into 106, 110. I'll be looking for those top end levels to be rejections again. So 110 if we stay weak. Okay. So 90, let's pay attention to 90 and then below 88, it may be a little bit of lights out there, down into potentially the 70s. All right. Got earnings coming up in May. I'd love for it to drop down here into earnings. Like if it can get down there before, May or so, and somehow we have some type of crazy crash this week or something. I mean, that level right there is absolutely wonderful. Like 50 and $60. Those of you that have been in leverage for about a year, year and a half or so, we remember trading Nvidia at 500 when 2024 entered. This move right here, right when 2024 hit, it broke 500 and then just parabolic move. So if you think about it, this is just a break and a big retest of that 500 move, which it never came back and retested. So that's why I've got $50 as my final level on the video. $50. I'll call it right here. Yep, $50. So if we see Nvidia below 85, just look out below. Just make sure you have that final number in mind of like, okay, 50, 50, 50. So if you're trading calls back up, right, and you're positive, right, make sure you trim your profits, in my opinion, at least for now. Because as you can see, Nvidia has changed trend and every pop is getting shorted. Every pop is getting shorted. Right. And it's kind of broken this 103 level. So it could come back up and retest that 103, 105, 110 level. Right. So we got to be just a little bit mindful of Nvidia maybe trying to just get back down to that 50 or $60. And that's where you'd want to load up the boat. If people are looking like, where do I want to get Nvidia? In my opinion, 60, $70. And if you can get it at 50, great. And just have that in the back of your mind. If it bounces before then, cool. You picked up a little dip and great. We got it. That's just my opinion. Okay. So I'm looking for a bounce this week or looking for a recovery this week. And if we're back up above some of these levels and we get back going again, then we can confidently take it back up. Cool. All right. Any others? Any others for everybody? I'm gonna start wrapping it up here. We're rightfully about an hour 15 in. Roughly about an hour 15 in. My main watch this week. I'll let everybody know in live trading or in our group, depending on when I wake up in the morning, where I see the market, I'll jump in, give a sentiment. If we see something, our strategy has been kind of waiting to the middle of the day and seeing really, really solid trades there. All right, it's just a lot safer, a lot better versus trying to get something right off open. So keep that in mind. If you're in my live trading group, if you're inside of leverage, we might just, wake up in the morning, get a little sentiment, chill, get some levels, and then enjoy your Monday. All right, let the market settle in for a little bit because it's going to be very, very panic stricken in the morning, in my opinion. All right. Apple, we got a gap below here at 175. So I'll be looking at what Apple does. We may could, depending on if the market stays weak, that's one that we could potentially trade down into this 170. It's not as risky, so a little bit of a pop. And if we stay weak, like we did on Friday, and we start to trend, we break new lows, we can take Apple down into that 175, 173 level. So that would be your bottom in the range if you want to look at maybe some options contracts just to keep it on watch. A lot of interest on those 170 puts, 175 puts for this week as well. A lot of interest on those and volume. So those are ones I'll be maybe taking a look at this week for Apple to continually stay weak. So I'll be watching that because Apple is heavily affected by these China reciprocal tariffs. Amazon had a big rejection here at 175. These are my kind of like weekly watches for some day trades. Great trade on Friday, Shalita. And for anyone who took that Amazon trade, that reject was really, really nice to perfection off this 177. So I'll be looking at that as well. This is just a beautiful another bear flag. We see a clear rejection there. Where is it going? If we get a pop back up into 175, 177, we could repeat the same trade on Amazon. Okay. Could be a pop back up into there. Maybe give it a little bit more room back into previous days, maybe 183. Maybe a pop back up into there like that. And then I want to take Amazon down into that 160 level. Okay. So these are just day trades, right? I'm thinking long term, right? Buys, but I want to trade the trend right now, which is still pops, fades, pops, fades. I'm not trying to time the bottom. So Amazon, let's watch out for that on this week, and maybe it'll present itself sometime tomorrow if we get a little pop on Amazon up into the high 177s, 178s, 179s. If we see it underneath 180 getting weak, I'll be looking to short that as well. So Tesla, I don't like to mess with the beginning of the week. Google has a gap down a little bit further. So you see that Google, it's almost into the gap. So put this on your watch as well, as Google has room pretty much down into like sub 140s. Sheesh. Sub 140s. So typically when it gets through that gap, it just comes down into the next buyer zone, which is down into here really, like 135. So Google, if we can get a little pop on Google, hopefully it doesn't, get away from us too quick. But you can see that clearly there's a little gap right there on Google down into like 140. If it breaks underneath 140, we're coming to 135. So those are some that still have gaps on them. So you can look at those 140 puts potentially if they're cheap enough, or just wait until it falls and see where we go from there. All right. AMD, trying to see if anything else has gaps. Just a little final test here. I'm so salty on this AbbVie. Golly. If you know, you know. AbbVie top ticked it here for puts and just did not pick the right contract, missed the retest, clear lower high, beautiful trade right there, and then just accelerates. So if I can get a pop back up on AbbVie into 200, I'll be looking to short that again. Probably picking longer contracts out down into the 170s. They're very inexpensive. Look at the contracts, 1,000%, 1,900% on your money. Just have to have the proper entry on this because it is a little bit of a slower mover. But you can see how much money, just crazy. Just trading the charts. I think Netflix is about dead pretty soon. Netflix will be back down to 700 pretty soon. If we can get a pop on there, this is a clear kind of head and shoulders here that's presenting itself on Netflix. It's kind of ugly, but it was more so up here at the top. But Netflix now has changed trend. It's going to start accelerating down into 800, below 800. I think Netflix is going to start doing something like this pretty soon. There's some big apps on Netflix too. Netflix retest down into 700 right there. Yeah. I wish Netflix contracts weren't so pricey. It's like $2,000. Ridiculous. Just looking for some gaps. I'm done, everybody. That's all I got. Unless y'all have any final questions, I'm just looking at some other stocks that may have some gaps on them to the downside. We can take a little bit further. Starbucks, I think it's starting to fill that CEO gap. Yep. CEO gap on Starbucks. You know what I'm talking about? They announced a new CEO. Starbucks was not doing that great. It was at $70, popped all the way to 94. And like I said, the gaps always get filled. It got to the top here, and now it's filling it all the way back down. So we'll see what it does below 80. It has room down into 75, but Yeah, we'll keep an eye on Starbucks. A lot of gaps there, a lot of big downside. Delta has earnings this week. I don't know what the aviation industry, airline industry, what it's gonna do, but it's got earnings on Wednesday. We'll see. It's back down in support again at $30. Who knows? Could be a buy. Could sell further. Don't know, but it is extremely oversold on Delta on the RSI. So I'd say it should pop a little bit. So that'll be on heavy watch. Maybe in the summertime, people will be traveling again for vacations, things like that. I think there was still a lot of travel that picked up at the beginning of the year. So these are going to be their Q1 earnings. So we'll see. Contracts are very inexpensive. That could be a decent lotto personally. To June contracts, 45, 10,000 interest, $150. That's all. That's it, folks. That's all I got right now. This help, crypto. Put a 1 in the chat if this helped anybody. Gave some value. Put a 2 if you're still confused or you're interested in maybe Leverage University or our boot camp or coming inside or just like wanting to learn more. Maybe approach it that way. Crypto is becoming very interesting. Not surprising here. We said that Ethereum would come back to 1500 based off the charts. It's broken trend, come back to 1500. We'll probably see it at 14 or 13, maybe down into 1100. Bitcoin, clear as day, bear flag, coming back down to this moving average. Maybe it'll touch 65 to 70,000. We'll see what it does there. But everything's playing out to perfection. No surprises. Shouldn't be. It's dip buying time. It's trying to see where a bottom is time. We'll probably see some crypto names tomorrow. Gap down, Coinbase, CleanSpark, MSTR. I think MSTR is about done. I think it'll start getting back down underneath 200 pretty soon. Just downtrending. It'll be like that pretty soon, in my opinion. Nothing? All right. KO. Okay. Coke. Oh man, that's that one. I forgot. It's doing exactly what you said. Kind of went off my watch list. I love this weekly time frame. This could be a beautiful short off of Coke. I love that that inverted hammer, that shooting star candle on a weekly that finished last week. This could start accelerating down into 65 and into the low 60s. So another 10-point drop into this gap as well. So I appreciate you, Lloyd. So I love that. I love the failure back underneath it. I think it's great. I think just when you're chasing like this a little bit, the first pop entry would be at 70. So if it can get a little bit of a pop entry at 70, if the market does recover a little bit, maybe 72, but you definitely have to put some time on something like this or keep it in the money. So if we know our final level on Coke would be 68 and then ultimately down into this gap, kind of like what Starbucks did and whatnot, and down to 60. If I want I want 60 or I want at least 65, I may want to look into for something like Coke, maybe like a June or July, spend a little bit more in the money. You can see the open interest on this 57.5, decent amount of interest there, but it does have some at the top here just in case it wants to pop up a little bit higher again. So it needs to remain underneath 70, maybe 72. But I love the fact that it is giving me that, big rejection off 73, failure back underneath 70. And we got those moving averages back down. So you're absolutely right. I think it's a great entry right around this level, close to 70. And maybe keep your stop, or maybe one final ad, Lloyd, at 72 or just underneath 72. if it pops up just back to retest to try to get back above 72. So I would look at that. Now, another thing you got to be careful of, Lloyd, that I'm just kind of watching. I don't think it's that idea personally. Is could this be failure underneath 68 would be a firm entry as well. So if you're playing, if you got two ideas, okay, two ideas, failure underneath 68. So it gets underneath that 68, that moving average right there, then you can take it down even further. Okay. So watch that 68. If it pushes down into the air, that might initiate a bounce off of there a little bit. Okay. But I love that gap down below. Also RSI, a little bit overdone, overcooked on higher time frames. We see what it did last time. The RSI was up that high, went from 72 or 71 and some change down to 60. So yeah, I love it. So I think entry, if you're asking, would be somewhere around now for a starter position and just put some time on it. This could be a long-term short. You could even look at maybe September and just trust it. But I would say June would probably be the best unless you do May and keep it more into the money, like at 60. If you try to do anything sooner than that, like into like May 2nd, or even if you're looking at like, can it happen by next week? Yeah, but it could go back and forth in the next week or so. So I just probably keep it more in the money if you're day trading it. Keep it right at, 69, 68, maybe even 70, and just keep it right there. Cool. Awesome. Well, thank y'all, everybody. Appreciate it. Let me know with a screenshot, if you could, screenshot of this picture right here, and just say, hey, I was watching this. I appreciate the shares. Just tag me on IG. Let me know what you would like to see. I'm not perfect, so if I, am a little bit if I'm too complex, if you want it simpler, if you want us to go over something first, let me know ahead of time so we can do these Stock Summer Sundays in the way that you would like to receive them. But yeah, this is just an overview. The execution happens inside of our Discord, inside of our university, where I'm giving the exact ideas. I can't predict what's going to happen. I can give a read, and then we'll react based on when the Monday market opens. All right. Love y'all. Appreciate it. We start our boot camp Tuesday through Thursday of this week. There is a code. You can use early 100 if you'd like. If you do want to join back in, maybe someone has already taken it, let me know, and we can create something there for you. But other than that, peace, love, and blessings. I'll see y'all this week. We may live trade tomorrow.